Here with this week's hottest stories in the investment world, this is Zacks Friday Finish Line.
Hello and welcome to the Zacks Friday Finish Line. I'm Maddy Johnson, an editor here at Zacks, and I'm joined again today by Tracey, Ryniec, a Zacks stock strategist. So welcome back.
Thanks. 2 weeks in a row.
2 weeks in a row. So today is Friday, March 31st, and we're here to recap this week's biggest stories from the investment and financial world. It has been a long month, kind of a crazy month and a crazy week at that. So we're going to start off today by discussing the Dow Chemical and DuPont merger. So it finally gained approval from the European Union. So it's a big step in an acquisition that has been talked about since 2015.
Yeah. This is a big merger, $77 billion.
Oh, wow. Yeah. So on Monday, the EU approved the merger between Dow Chemical and DuPont after both companies committed to divest major portions of each of their different businesses. So the two industry giants will separate into three different publicly traded companies focused on agriculture, material science, and the production of and sale of specialty products. The Dow and DuPont merger is expected to lead directly to $3 billion in cost savings.
Yeah, I think the EU is really concerned that they don't want just only a few players in some of these agriculture areas, and because that really might stymie innovation. Like, you're not going to go out there and find out the new fertilizer if you're the only one in the fertilizer market.
Right, exactly.
You would have no incentive to do. So I know that they're making them divest some of their R&D areas and things like that, so that hopefully the innovation will still be there, even though they're allowing the merger to go through.
Yeah. So the moves to sell significant portions of both companies were spurred, like you said, in part by the EU's concern that it would disincentivize innovation, specifically for herbicides and pesticides, and create less competition if both companies were allowed to keep all current business assets. So DuPont is scheduled to sell most of its global pesticides business as part of the deal, while Dow is set to sell all of its petrochemical, acid, copolymers, and ionomers businesses. So very technical. However, Friends of the Earth Europe, a lobbying group, say that the DuPont and Dow merger could lead to the three new companies controlling 70% of the world's agrochemicals and over 60% of commercial seeds. So
that could be. That's the danger.
That is the danger.
Yeah, I am surprised that they did let it go through, to be honest, but they are. So now that they've given their approval, it's probably going to happen.
Yeah. So this merger is the first of three major mergers that will reshape the chemical and agriculture industry. So there's also China National Chemical's $43 billion bid to acquire Switzerland-based pesticide and seed maker Syngenta. Mm-hmm. And German-based chemical giant Bayer announced its planned $57 billion acquisition of U.S.-based seed maker Monsanto.
That's right. So you can see why everyone's concerned about this, because you had
they're all
6 players and they're going to consolidate down to 3, plus some of these spinoffs. But yeah, I mean, it's definitely the big getting even bigger.
Yeah.
It makes less innovation.
It's kind of happening across all industries too.
It is. But in this case, it's going to be very narrow.
Yeah. So moving on to more retail earnings, they just, I mean, we talked about Nike last week.
We did.
Restoration Hardware and Lululemon, both more luxury companies, reported this week. So on Tuesday, Restoration Hardware, which is a luxury home furnishing giant, and I say luxury, I mean luxury. So this is very expensive furniture, very nice furniture. My goal is to one day furnish my entire house from Restoration Hardware.
Well, they do have some lower lines in their defense. I do own the stock in my own personal portfolio, actually.
Oh, nice.
But yeah, I mean, you can still get a couch for like $2,000 from them, but it does go up from there.
It does.
Yeah, quite quickly.
So they announced fourth quarter results. They posted earnings of 68 cents per share, which beat the Zacks estimate of 65 cents a share, and revenues of $586.7 million, and that was slightly below the Zacks estimate of $589 million, but the decline in revenue marked a 9.3% decrease year over year. RH Management stated that the fiscal 2016 results were hurt by a ton of strategic investments that the company expects will begin to pay off this year.
That's right.
And these strategic investments look to be pretty promising.
Yeah. So over the last, I would say about 18 months or so, they've launched two major business lines, RH Modern and also RH Teen. At the time, I thought, oh, maybe they can do it because these are just like huge business initiatives.
Yeah.
So even to launch one of them, which included new source books, they have an RH Modern full store in Los Angeles now.
Oh, really?
Yeah.
Okay.
And then they carry the line in some of their other stores on like one floor of their other galleries. But yeah, they have a standalone in LA. And so these are all huge things. Then they had to figure out once it launched, there was a lot of excitement about it, how to get the product to the customers. And I thought, oh, maybe they know what they're doing, but it turns out they did not. So last year was kind of a disaster.
Yeah.
They just took on too much, I felt. Like, just launch one of them. Why do you have to launch both? And then they also switched to a new rewards program for their customers, that
It's like
RH Gray card.
Subscription?
Well, you pay like $100 a year or something,
Oh,
and then
okay.
you get the discounts instead of constantly sending you emails of
I
like
see.
40% off or whatever. You
So
become a
flooding your email
member.
box. Gotcha.
Yeah. And then you get, I think it's 25% off everything you buy there at any time. So there's nothing that like goes on sale as long as you're a member. So that they were rolling that out too while all this was going. So yeah, they had too many balls in the air and some got dropped, but they admitted that and they called last year a transitional year, which it was. So sales actually, even though they launched these new lines and had some issues with getting the product to the customers and all of that, sales were actually in the green for the entire year. So they never saw sales decline into the red, which is good given the environment.
Right.
And now they've seemed to have fixed some of these issues and are now moving forward into 2017, having, learned some lessons and righted the ship.
Guidance looks really promising.
Yeah. And I listened to the conference call, and Gary Friedman, their CEO, he's their leader over there. And you can tell when he feels things are going better because he starts giving his inspirational quotes in the videos. And he quoted Helen Keller, and he had a quote about vision this time and about like the vision for the company and everything. When he's feeling good, that they routinely quote prominent people over there, like Pablo Picasso and like various artists and people. So I knew, he's quoting someone again. So that was good though, because I do think that they probably are on the right track now. Like the beginning of the year, they still have an overhang of some inventory that they're getting rid of. So they did say they're going to see bigger sales at their outlet stores. They're just basically shoving the old inventory over there, the stuff that wasn't working. And once they get rid of that by the second half of the year, they expect it to be a little smooth sailing. And then last year as well, they also blamed the energy downturn and the lack of buyers in like the Miami market from like Venezuela and Brazil and everything because of their bad economies. They weren't going up and buying condos and then buying the furniture up there. This time, this conference call, there was no discussion of either one of those things. So I guess
their stock benefited. I know after they reported, it was up like 16%.
Yeah, it has rebounded off the lows. So we'll kind of see what goes on with them for the rest of the year. But furniture in general has not been bad because the housing market is good. And when the stock market is at highs, especially on this upper level furniture, then that's who's buying. They feel good because their stock portfolio is at record highs and they go out and buy a new couch or whatever they're doing. Yeah.
It'll be interesting to see how their RH Teen competes with Pottery Barn Teen.
Yeah. Pottery Barn Teen is struggling a bit. RH does not break out what each of their divisions is doing because they consider it to be kind of like proprietary information. They don't want everyone to know exactly what RH Modern is doing or RH Teen. So if RH Teen is struggling, but one of the other ones is doing good enough to mask it, we don't really know. They don't tell us.
It's a secret.
Yeah.
All right. So moving on to athleisure giant Lululemon.
Ooh.
A controversial one.
It is.
Usually every time they report. So they also reported fourth quarter earnings. So while both sales and earnings improved year over year, earnings of $1 per share lagged behind our Zacks estimate of $1.01 per share. Revenues came in at $789.9 million, beating our estimate of $785 million. Consolidated comps, which include in-store comps and direct-to-consumer sales, increased to 6%, which is pretty good.
Yeah.
So in-store comps were up 6%, while While direct-to-consumer sales advanced 12% to $164.3 million. And moreover, gross margin expanded by a substantial 390 basis points to 54.2%.
Yeah, that was a nice expansion.
Yeah. So those last few things that I mentioned, those were pretty good things for Lululemon.
Yeah. Especially in this kind of rocky, because that was for the holiday period.
Right.
Holiday quarter. And not everybody was even in the green for comps in the holiday quarter.
Right. But kind of looking back on, I know you mentioned to me earlier, you listened to their conference call, correct?
I did not, but I've been following everything else that was said in it, what was going on. So yeah, I mean, they basically, they guided lower, and that's why
their
stock had a big sell-off.
Really stock.
Yeah, they guided 25 cents to 27 cents for the first quarter, and Zacks consensus was at 39. So that's well under the Zacks consensus. Yes. So as I told everybody on Twitter, the analysts will be cutting their estimates to get in line with this new consensus, most likely. I mean, that's pretty dramatic. So they will cut the full year. So the Zacks rank will drop. I would not be surprised to see it go to a number 5 strong sell.
Okay.
In the next week or so.
Yeah. I know you had said that, so something was said about their product just not hitting the mark with customers. And I think looking back, I think that was really true. There was just a lot of grays,
they said
and beiges and taupes. There was just no color whatsoever.
They said it was too dark and the customer didn't like it.
Yeah.
So they have more color going forward, but it is going to impact the first quarter because they weren't able to, once they determined that was an issue, it takes a little time to get new product made and then, shipped into the stores and online and all that stuff. So you're probably going to see a little bit of a drag for a little while until the new product gets in.
Right. But people still like to buy their stuff.
Yeah, this is what I have to say. Of the numbers you just reported there, they had almost 800 million in sales for one quarter. I mean, think about that, 800 million of yoga wear. So yeah, I always hear who's buying it, who's paying $100 for yoga pants. A lot of people think it's absurd, but they have thought that it was absurd for the last 7 or 8 years. I've had this conversation with people. And even though it's had its issues and it had that one PR disaster, they're still trugging along and they're still growing that revenue. For the full year, it was $2.3 billion. Their CEO said they're still on track in a couple of years to get up to at least $4 billion in sales. I can't argue with that.
Yeah. Its brand is really powerful and it means something to a lot of people across a huge age demographic.
Yeah.
To young women, to teenage girls. It means something to just everyone.
Yeah. Gen X.
To Gen X, yes.
For sure. I do say, if you're thinking about buying the stock, you might want to look at valuation and all of that because it was bid up a lot into these numbers because people did think it was going to be a good holiday quarter. And it was. It was reasonable, at least. Mm-hmm. It was only this first quarter that's going to be a problem. So the shares have come down, but if you're looking for an actual value there, it's still not a value yet. So if, it sells off some more, you might want to look at it to add to your portfolio as one of the bigger name brand retailers, because it does matter where you buy a stock, at what price you're buying it, and how much you're paying for those shares. But all this kind of talk, I keep saying it's doomed and it's not going anywhere. That's just not true.
Yeah, that's good to know.
Yeah.
All right. So moving on to our main story of the week. Just a little thing called Brexit.
Yeah.
So at about midday Wednesday in Brussels time, Prime Minister Theresa May formally invoked Article 50 of the Lisbon Treaty, which is the measure necessary for Brexit to happen. So
yeah, I didn't think it would happen.
No.
I thought they would get out of it somehow and never trigger the Article 50.
Yeah.
But so it was kind of a sad day. I felt like it was sad.
It was overwhelming to me as well.
Yeah, just how much has to go on. I mean, even to just take all the regulations and all that stuff, they're just going to impose them back into the UK or something I was reading, because they basically still have to have the same law as what's going on in the EU for the most part, the major, I don't know. It's just super complicated. Right. The next 2 years is going to be crazy.
Right. So we all remember last June when the UK shocked the entire world and voted to leave the EU. The Dow plunged. It was over 500 points. The British pound fell below its 30-year low, and almost every international index plunged as a result. It was crazy. It was hectic.
Yeah.
I just remember that was the only thing I wrote about the entire day. So what is Article 50? Article 50 of the Lisbon Treaty provides any member the right to leave the EU, and it outlines a path for the procedure for doing so. It sounds simple.
Right.
It's a lot more complicated than that. So it gives the leaving country 2 years to negotiate an exit deal, but this time frame can be extended. The process for extending a deal it's complicated.
Yeah.
So from that moment forward, when the treaty was given to the person at the EU, I forget what their title is called, the UK has 2 years to work out a deal for exiting the EU, though many believe it will take many more years than that.
Yeah, I mean, there's so many parts to it, as we said, and it has been so integrated. People don't realize over, what has it been now? 25 years or something? So there's whole generations of people who've been living under this and under these rules and all what it implies. So yeah, there's just even some stuff that they're already struggling with, and they just declared this is, what do you do with I guess there's a little over 3 million EU citizens living in the UK.
Oh.
What do you do with them? And then what do you do there's over 1 million UK citizens in the EU. Are they allowed to stay in their respective places? Like, what kind of rights do they have? Will they get a special passport? Like, what happens? Like, no one knows. That all has to be negotiated. And then the UK is also on the hook for some liabilities because they won't be leaving it officially for a couple of years. And it's like 60 billion euros, which they basically do have to pay. Yeah, but there's been already talk about that. Like, do they have to pay it all, or what's happening with that? So that won't be real fun. And then you have the issues with Scotland. Apparently, I saw some rumors that they may try to do their referendum again. Yeah, and leave the UK so they can stay in. So that could be another big issue. And then I just saw also that the EU is already playing, hardball already and saying that the UK wants to negotiate both the divorce part and the new trade deal at the same time.
Right.
Yeah. And the EU's like, no way. We want the divorce and then we'll do the trade.
Right. That was Prime Minister May's her golden goal, if you will. Like, that's what she really wants to do. And they're like, no,
they're already saying no. So that's not good for the UK. But there's other interesting little things that could influence sectors and industries you don't really think about. One of their big industries that will get hit is the auto sector, because there's a lot that are built in
Ford.
Yeah, built in the UK. And then you got all the same problems we have with the NAFTA here with Mexico, where parts go back and forth and then they're built there and they're shipped over. And what if there's new tariffs and all this other stuff? That's true of a lot of manufacturing. And then you have the financial jobs, because
London's the biggest
financial capital of Europe.
Right.
But they do think thousands of jobs will leave because they were EU related. Either they're trading the EU, euro or whatever. Are you going to be trading the euro in the UK now? No. So you're going to go somewhere else, whether or not it's Paris or Berlin, or we don't know yet who's going to win out in becoming the next big financial capital. But that's a big deal because finance was 12%, I think I read,
of the GDP.
Yes, of the UK. So that's a huge deal. And then little things like the airlines.
And travel.
Yeah, right now, obviously, you can go anywhere if you have the EU passport, and that has increased all the travel in between.
Skies.
Yeah. But if you are, say, British Airways, you'll still be able to fly London into Paris, and all of that is probably not going to be impacted that much. But if they have routes, Germany to Italy, internal routes like that, they may, I don't know. But if they do, that all has to be renegotiated because they're no longer in the EU, so they no longer have the right to fly between the two EU countries. So that's a whole nother thing. So yeah, there's all these little particulars. We really don't know how is it going to affect the UK economy and the EU and the rest of the European economy. We don't know, but really the UK is going to be the one in focus.
Yeah. All I know is I don't want to be part of that. So
no, when I saw it was all going on, I was like, okay, well, good luck.
Good luck.
Sorry.
See how it plays out.
Yeah. I'm sure there will be some surprises to the upside that they didn't know were going to happen
That's
are
a good point. Yeah.
Yeah. And then they will likely see some negative things too that they didn't anticipate as well.
I know on Wednesday I was looking at the Dow and the S&P 500, and there wasn't a lot of movements either way like we saw last June.
Right.
So it'll be interesting to see how any of these trade negotiations or just negotiations in general will affect the greater global markets.
Yeah. And a lot of U.S. companies are over in the UK, as you said, Ford and these other companies that have a lot at stake as well. So it could impact a lot of the multinationals.
Definitely.
Something to watch as well.
Yeah. I was reading on CNBC that official Brexit talks could begin as soon as April 29th.
Wow.
So
only a couple weeks then.
Only in a couple weeks at the next planned summit in Brussels. And that will bring together the leaders of the 27 remaining EU member states. So they're just really chugging along.
Yeah. Well, they've had a couple months now to realize that this is for real and we're not going to wait around.
Right.
We're just going to get it over with and then move on. That's how they're looking at it.
All right. Well,
I'm sure that you'll have updates as we go along.
So I think that does it for this week. So again, thanks for listening. And remember, if you think we missed anything or if you want us to cover a different story, please shoot us an email at podcast@zacks.com. You can also check out all of our other exclusive audio content like Tracey's podcast, Market Edge, and the Value Investor podcast at zacks.com/podcast. Remember to subscribe and leave a rating on iTunes. Thanks again for joining, and we'll see you next time on the Zacks Friday Finish Line.